All right, and we are live. I hope so. All right, so cheers, everyone. Crazy day in the markets today. I mean, just look at the shit. I mean, what the hell? I gotta say that I am a bit less confident in a V-shaped rebound after today. And I believe that, well, the sell off is probably going to persist unless something weird and something unpredictable is going to happen in the next weeks. I will discuss what that thing might be in this live, and yeah, hopefully I will give you an idea of how I screen through the markets on a day-to-day basis and how I analyze particular stocks. So I hope this is going to be a long live. If anything joins, that would be amazing, so I can have some Q&As. And yeah, so let's go through it. First thing I do, I go to Finviz and I have a look at what's going on. So usually this gives me a first picture of what industries are popping up today and what are the ones that are selling off. So of course, today I don't think that there has been anyone that survived. Maybe Netflix, yeah, they had earnings today. I didn't see their results, but I think they beat both EPS and revenue estimates. And I don't know the narrative behind Netflix. It's not a stock I analyze. Maybe I can do it in this live. Why not? But yeah, it's been a crazy day today, and it's not a surprise. So I will first start with this. I gotta be really honest with you. The very first thing I do is really check the SPY. So the SPY in the pre-market, because I live in Europe. When I wake up, well, an hour after I wake up, I get to see the pre-market data for the SPY, and here is where I will check to see, is there a large sell-off in the pre-market, and if there is, that's when I will go into the details and check different financial sites to understand why the sell-off is happening. So that was the case today, and I saw pre-market, it was down by about 1%, and then I went into different. I usually use Wall Street Journal. I use hopefully you can see it there. Yeah, I use Wall Street Journal. I use Bloomberg, Reuters, CNBC, and Seeking Alpha. So these are my financial sites, and that gives me an idea of the macro. So, when it comes to my investment style, I have to say that I don't have just one style. It's a mix of everything. I usually don't pay that much attention at the macro, except when the broader markets are selling off. When everything is going to hell, that's when I start to care about why everything is selling off. And that's why I check the news. I check, what macroeconomic factors, of course, on a superficial level. I don't go into details. I don't think it's really worth to go into the details on, what's going on in Asia and Europe. You can go through that rabbit hole and you will waste your entire day just by getting a grasp of the macro. And by that time, you haven't done any analysis on a particular equity, and you wasted your day learning about macroeconomic stuff. So I tend to just superficially look at what's going on. For example, today, there is an article here. I also like this part, the markets coverage, that gives you a quick summary, of the things that are happening during the day. And then I will just read this article, and then I will go into the links to understand, a little bit better on what's going on. But I wouldn't spend more than 5 minutes with this, I will be honest. So today, of course, we got this post in the morning. That was insane. So it's weird that I get to see this truth, however you want to call it, by this guy. And he's essentially saying that there is data showing that interest rates are coming down. That the inflation for different products, for example, the energy costs are coming down, the food prices coming down. So because that inflation, which I think is called the core inflation, is showing signs of cooling off, That's why he's saying, "Oh yeah, there is no inflation. There is virtually no inflation." It's so wrong. In any case, I will tell you why I think it's wrong, because there is no there are no signs of inflation. He's saying that these rates, the interest rates, should come down. It's crazy. So far, the inflation data has barely taken into account the tariffs. And when I say barely, it's just China, the 20% for China, which has been in, during the month of February. And I think that's pretty much it. So we didn't have anything, like 20% on Europe. Or, well, we did have indeed the 25% on Mexico and Canada. So that part, I believe, I'm gonna have to check again the tariff tracker, but I think the tariff on Canada, it was from March, yeah. So part of that is already in the inflation, in the core inflation data. But it's not enough, and of course, Jerome Powell is not able to take this evidence, which is past evidence, and then extrapolate it into the future, saying that, okay, so just because past data is showing no inflation, that means there's no inflation. Let's get the rate to 0%. It's crazy. It's crazy. So, he's pretty much saying in the tweets, whatever this is, he's saying that just what I predicted, they will do that. That's crazy. There can be almost no inflation, but there can be this is the reason for the sell-off. So he said there can be a slowing of the economy, sorry, unless Mr. Too Late, a major loser. That's insane. These are words from a president or from a teenager, roasting. What the hell, man? Lowers interest rates now. Europe has already lowered 7 times. Of course, Europe and the US is the same thing, so why not follow Europe? Paolo has always been too late, except when it came to the election. Yeah, so again, this, I don't know, it doesn't sound diplomatic to me. In any case, we have, this was from last week on April 16th. So we had, I think there was, the Economic Club of Chicago. There were some remarks by Jerome Powell, and there is a 2-minute video I wanted to include to really give you an idea on why I believe eventually the U.S. government is going. Well, the U.S. government, the Trump administration is going to fire Jerome Powell. And let's go through the video, and I'll give you my opinion on why I think so. So let's go. Hopefully you can hear the audio.
Reiterated that you intend to stay in office until the end of your term, and that certainly reassured many in financial markets. What are the levers the government or the legislature have to pressure the Fed? And should one worry about threats to the Fed's independence once you're gone?
So our independence is a matter of law.
Yes, so this is exactly one of his greatest points. So the independence of the Fed is it's by law, and it should be, their decisions should be completely indifferent from the politics that are happening in the country. They have to be based on data. They have to be as objective as they get. And yeah, he has a very good point. Let's see. So the only way, when he said that they are only removable by cause, it means that if he fucks up, that's the only situation where he can be fired, where he can be laid off. So now, of course, Trump and his administration is going to try to prove that he screwed up. Yeah, so that's the only way that he can lose this position. But it's not by being in disagreement with the current policy, on tariffs, etc., etc. Yeah, so let's continue.
So we're protecting the law. So Congress could change that law, but I don't think there's any danger of that. Fed independence has pretty broad support across both political parties and in both sides of the hill. So I think.
Yeah, so essentially saying that both Democrats and Republicans, they prefer that independence from the Fed because they have a long-term monetary policy, and that should be always, regardless and independent of the party that's running the country.
There's a Supreme Court case people will have read probably in today's journal that in which the Supreme Court may decide whether independent agencies generally, whether they're authorizing laws, can contain a provision that prevents the president from firing members of a commission other than for cause. And that's a case that people are talking about a lot. I don't think that decision will apply to the Fed, but I don't know. It's just
All right, so there you go. There is some uncertainty. Again, nobody knows whether the government can actually fire the Fed chair. So, yeah.
situation that we're monitoring carefully. Speaking, Fed independence is very widely understood and supported in Washington, in Congress, where it really matters. And the point is, we can make our decisions, and we will only make our decisions based on our best thinking, based on our best analysis of the data about what is the way to serve to achieve our dual mandate goals as we can to best.
There you go. So, as I said, it's based on data. It's based on pure objective figures. And it's not based on politics or supporting the current president or the next one or the next one.
Political
Yeah.
pressure. People can say whatever they want, that's fine. That's not a problem. But we will do what we do strictly without consideration of political or any other extraneous factors.
You see the applause? He's right. He's 100% right. And I fully support him. And I fully agree with absolutely everything he said. That's why I think he's going to get fired. You see what I mean? Do you see what I mean? What he said makes complete sense. Like, I wouldn't be able to question a single sentence of the 2-minute video that we have seen here. Not a single one. And yet, I still believe he's going to get fired. Because currently, the new administration does whatever they want. They have a lot of people loyal to them. And eventually, the president is going to be able to find his way to get away with whatever he wants. And I think that there is a very high chance for Jerome Powell, who I believe did a good job. He did a fair soft landing in 2022. You probably remember the newspapers, everyone was roasting the poor guy that, it's going to be a crash, a plane crash, whatever. No, there's been a soft landing in 22. The markets didn't crash. They corrected themselves after a bull run after the pandemic. And he did a great job. So I really don't see why he would get fired by cause, by mispractice or anything like that. So to me, it doesn't make sense, and that's why I believe he's gonna get fired. Like whatever makes sense, short it in the current economy, and you're gonna win. So that's gonna be one of the things to keep a very close eye on, particularly with rumors. So my take on this during this week is going to be to check, I'm not even kidding you, every fucking 2 hours, maybe even more frequent, I'm going to be checking on the different financial sites. So definitely Wall Street Journal, definitely Bloomberg, definitely Reuters, and definitely Seeking Alpha. So Seeking Alpha, they have, in the homepage, you have trending news. And if you see here anything related to Bloomberg rumors they found out that Jay Powell is going to eventually get fired and the decision is imminent, but it has not been confirmed officially by the US government. That's the moment to buy deep out of the money calls. And I believe we're going to have a similar situation as what happened back in, was it April 9? Yeah, April 9. So you probably know on Liberation Day, let me just go back to the charts. That was, it's crazy. So on Liberation Day, I was actually tuned into the markets. So here it is. And if I can I use an intraday chart? I believe, I promise I'm not a degenerate. I look at daily, weekly charts. I never look at 15-minute charts. But just look at this. Yeah, this is very interesting. So you had on Monday, you have this huge bull run for about half an hour. Yeah, where the market went up. How much was it? 5%. And what happened is that you had the rumor, I believe it was from Bloomberg, I'm not sure exactly the source, but you had the rumor that, the Washington was considering to pause the tariffs. And then suddenly, you got the secretary coming live on TV saying that, it's just bogus, or was it on Twitter? I don't even know where it is. And they said that it was bullshit, the news. And then, of course, the market tanked. And the following day as well, you can see Tuesday, things went up and then selling off. So that rumor, if you were to buy back then, or maybe on Tuesday, if you were to buy deep out of the money calls on the SPY worth $1,000, yeah, by Wednesday, considering this crazy bull run, that contract would have been worth 1.5 million. So that's asymmetric risk to reward profile. And yeah, anytime I'm gonna see now a rumor coming up on these news outlets, I'm gonna be buying the rumor. I gotta say, I'm gonna be buying the rumor. Probably not daily calls. Probably not with zero DT. That's what I mean by daily calls. Maybe they're gonna be, I don't know, 1 week, something like that, or maybe 3-5 days. But I will buy a lottery ticket because I don't think the current administration wants to see a sell-off. I really don't think so. And just by looking at price action alone, yeah, you just look at this, all right? This looks absolutely awful, So after the bounce on Wednesday 9th, I was expecting the markets to, just relax around this level about the mid 500s. It doesn't matter, 530, 570, somewhere around that range. I was expecting the market to be hovering around this range, maybe even bidding up prior to that end of the 80-day pause. But no, they're selling off. I mean, today, this was insane. Yeah. And I believe that if the situation gets worse with the Fed, and particularly if Jerome Powell stays as the chairman of the Fed, which I believe is the best case scenario for everyone, because lowering the rates now is going to spike inflation like crazily, and you're essentially just kicking the ball down the road. So if you lower the rates now, yeah, you're essentially going to camouflage to hide the unemployment from the tariffs. So small and medium businesses are the ones that are impacted the most by these tariffs. And of course, if you're importing stuff, if you're an SME, yeah, and you're importing stuff from China, which I believe like 70 or 60% of the imports, they go to SMEs, small and medium businesses. It's crazy. So if suddenly you have to pay a 145% tariff, you're out of the game. And if you're a small business, your margin is probably zero. And just imagine having to deal with that tariff on 145%. It will be it's not possible. From a business perspective, forget about doing business at that level. And of course, these small businesses are going to start firing people. But if you lower the interest rates, the big enterprises are going to ramp up with hiring. Why? Because borrowing money is cheap. So when the rate goes down, borrowing makes sense. And that's when companies, they tend to borrow and they tend to expand certain product lines, certain operations. They build new business units. And that's where, of course, if you're expanding, you need people to work on that. And that's where unemployment can tick up. So those people that work in small enterprises, they can find jobs in bigger corporations or even smaller enterprises that can get loans from banks and start their own businesses. So unemployment is bad when the interest rates are high, because that's when businesses they can get loans. And if you cannot get a loan, and if you're not well off, it's going to be very difficult for you to expand. So that's the whole drama, with the interest rates. And I do believe that lowering the rate now aggressively is going to be very bad for 26, 27. Why? Because inflation is going to tick up. So if we have a look again at, let's just see the CPI. Is it the Fed data? Yeah, it's been a while since I don't look at these figures. Right, so here I have to go to edit the graph. Essentially, I'm going to be looking for, there you go. Let's see. Percent change, there you go. That's the one. So here you can see that interest rates, if you zoom in, you have the madness that happened in 2021, 2022, where you had an absolute crazy year-over-year increase in the CPI. And then, of course, we have now the decline. So there is a big chance that, if I go back to the charts here, if those rates are going to go down again, and we have another chart. So let's see, Fed interest rates. There you go. So if these rates, they go down to 2%, 1%, who knows? Who knows? I wouldn't be surprised to see the new chairman lowering everything to percentages that would make no sense right now. So if you go down to these values, the CPI is gonna ramp up, is gonna rally, and if that's the case, that's not good, because now you're gonna have to get rid of this inflation, and in the end, the only way to do that is to raise again those rates, and that's where the economy usually pulls back. So that's why, from a macroeconomic perspective, I will be direct. It makes absolutely no sense, and there's no certainty, and that's why I'm not buying right now. I'm staying on cash. I'm sitting on cash right now. So that's the situation with this. It takes one single tweet or truth, however the heck you want to call this, to tank the market. I'm not really keen on this. I will be honest. And yeah, what else? So this was, I got a summary from this article. It's quite long. I usually don't read articles that are this long. Again, I don't want to spend more than 5 minutes with this per day. So I have a very cool article, not article, but an interesting summary. There you go. So it's a prompt essentially to summarize the article. So what we have here is that back in 2018, in fact, let's go through the bullet points. So this was, by the way, done in November last year. So it's an article written on November 10, and that was just a few days after Trump got elected. So we got Fed Jerome Powell has made it clear he will not resign if asked, and will legally challenge any attempt by the president to remove him before his term ends in 26. So during the first term, he expressed frustration with, this is Trump, he expressed frustration with Powell over interest rate hikes, and he was considering firing or demoting him, prompting Fed leaders to prepare for a legal fight, which is interesting. So Powell and former Fed officials argue that allowing a president to remove a Fed chair for policy disagreements will set a dangerous precedent, undermining the Fed's independence. And I believe that if the chairman is gonna be fired, I think he's going to appeal in the courts. So it says that the U.S. law allows the president to appoint the Fed chair, but is silent on dismissal. So the broader law only allows removal of governors for cause, but not for policy disagreements. This is key. So I believe that Jerome Powell has a strong case to demonstrate that if he is fired, if he actually gets fired, it's because he's in disagreement with the current policy, and not because he did something wrong, or he for mispractice. And why he did something wrong? Why he didn't do something wrong? Simply because he's looking at data, and data right now is showing that tariffs are higher than expected, which means that you're going to have more unemployment, which means that you're going to have higher inflation, which will also lead to higher unemployment because small and medium businesses are going to struggle with the current tariff rates. And he's at the crossroads where if he lowers the rate, of course, you're going to improve unemployment, but you're going to screw up the inflation. And if you do it the other way around, you're going to curb inflation at the expense of having high unemployment. So the problem is not from the Fed. The problem is from the goddamn tariffs. That's how I see it. That's how I see it. And to me, the whole drama with all these fucking tweets is just Trump using the Fed chairman as a scapegoat for the consequences of his tariff policies, which means that this guy needs Jerome Powell to stay there, because as soon as he's replaced by someone else who lowers those rates and follows him by the letter, what happens if, still with the decline in rates, what happens if the overall economy doesn't recover? So what happens if those tariffs turn out to be worse than initially expected? And I think that's what's going to happen. So that's why I'm a bit sketched out by the equity market right now. I gotta say, I had a good success in Q4 last year, but I don't think that a bull run of that magnitude is gonna be possible anytime soon, considering the crazy stuff that's going on in the markets. So yeah, let's go now through the screening process. Let's have a look whether there is anything interesting going on. Probably not today. Probably not today, but certainly over the last past days. So as always, I'm gonna look at all the industries first. So two ways I will screen. So I usually screen through stocks. Usually I do that when we have an overall bull run. So when the SPY is hitting all-time highs. Let me just show you. For example, you see the SPY like this, yeah? So bidding up, it's increasing the price, it's hitting all-time highs. In this scenario, usually I wouldn't screen through sectors or industries. I would do that as well, but it wouldn't be the first step. The first step would be to look at companies, and I will be looking at different equities, particularly in the US, and I look at volume, and I will be looking at what people are buying. So I look at both volume in terms of how many shares have exchanged hands over the past day, over the past 5 days, over the past 10 days, over the past month. And then I will look at dollar volume, which is very simple. So you take into account the number of shares traded during the day and the average price at which they were exchanged. So for example, if the share price right now, let's assume is 10, and I buy one share, yeah, volume is going to increase by 1 because I just bought the share. And the dollar volume will be 10 because I bought one share for $10. So 1 times 10 is 10. If I buy 2 shares at $10, that's $20. That will be the dollar volume. So I look at both of those things, and I will usually look at companies that have a strong momentum. At the same time, they have a strong narrative. So I will go a lot into the details behind, what the company does, what products they have. Do they have any milestones upcoming anytime soon? Do they have any announcements that are very close to being materialized? Do they have anything to show? And if they do, and I see an increase in volume, that's the moment I buy calls. And there is not a one-way approach. There are so many nuances that you have to take into account, and it's based on a stock-by-stock basis because each equity is different. And yeah, generally that's what I would do. So I would go through the top movers. So when you see the market like that hitting all-time highs, I really don't even look at news. I will be very direct with you. I don't waste my time with news. I will just go to Seeking Alpha, look at trending news, anything interesting. If I don't see anything here, I wouldn't bother to go into Wall Street Journal, Reuters, whatever. I wouldn't do that. So coming back to my screener, here we have all the industries, and I'm looking right now at momentum. So we have 1 day, 5 days, 1 month, 3 months. So let's have a look at what has been going on today. Right. So things that have been up. Real estate diversified. What? This was up today more than gold. I cannot believe this. Gold was up because when you have a lot of uncertainty, traditional boomer investors and some hedge funds, that need to diversify risk, they run into commodities. That's the go-to strategy. When shit hits the fan, you go to buy gold. It's gold or anything else that's considered as a commodity. But yeah, interesting. So let's have a look. Let's try to understand what's going on there. So real estate diversified. I have a filter applied here. Let me explain. So we have market cap. I have the market cap over 100 million. So I'm not looking at anything below that. Those micro caps are sketchy as hell. And yeah, I'm not keen on that. Price, anything above 1. To me, a penny stock is anything below 5, by the way. So if a stock is trading at 2, to me, it's still a penny stock. Why? Because generally, institutional investors cannot purchase, they can, but usually when you're a client and you're choosing a wealth manager and you give them your savings, the wealth manager has to provide you some documents as to what he's going to do with the money. And in those documents, usually they state that they're not going to spend your money buying penny stocks. And what's a penny stock? For institutional investors, it's anything below $5. To me, it's anything. It's the same, yeah. So it's anything below $5. And country, the US. I'm not keen on other countries. I think the stock market works really well in the US and anywhere else. I don't know. I just don't feel that the rules that work in the US, the rules, I mean, the trading rules or the investment rules, I don't think they are the same abroad. So here is what's going on, by the way, because we apply these filters, we're missing a lot of information. So I believe that the reason we have seen so we have how many? 5 stocks. And the summary across all 5, we have a decline of 0.1. But if I was to remove the filters, that's where we will have the overall industry increase of, I think it was 3.9. Let me just go back. So I think it was 3.9. Let's do that again. So show industries. Yeah, it was 3.2. So exactly, this takes into account everything. So not just the filters that I told you before. This takes into account absolutely every stock within this industry, including the ones from abroad. So I believe that's why we have that increase. All right. So gold, grocery stores, interesting. So department stores as well. How about the discount? Discount stores are there as well? So paper, that's not exciting, makes sense. Entertainment, yeah, that was Netflix. Yeah, so you see what I mean? You can connect the macro, which is the industry level, with the micro, which is the company. If I go to entertainment, I bet the first company is going to be Netflix. Let's see, by the 1 day return, well, is the third one. What? Only 1.6%? What? I thought it was way more than that. Let's have a look. What? Netflix. Holy shit. What happened? Yo, when I was looking at this for the first time, the stock was up by quite a lot. It was like here in the 1000s. And it went down. Interesting. Okay. So not even Netflix has really survived the sell-off. And I believe the results were spectacular. I mean, just look at, 16% over the consensus on EPS, and they met the revenue estimates. So that was a good quarter. Of course, you have to look into the narrative. You have to understand that that's just the past results are pretty much 40%, 30% of the reason behind this bull run. The rest is a combination of the narrative, the expectations for the next quarter, and fucking randomness. Because you can have great guidance for next quarter. You can have great results, meaning that the company beat earnings. And you can have anything, aligned for the stock to beat up, and the market can sell off easily. So that's, funds tend to manipulate this. It's easy for them to do that because it's a different process. With big companies like Netflix, it's not going to happen. It usually happens with shit stocks that are trading at $2-3. You have a hedge fund, or not a hedge fund, you have just a fund having different accounts. One account buys a lot of shares before earnings, and the other account is used to tank the price by selling, or in this case buying, shares from the previous account that bought before earnings. It's weird. Market manipulation is absolutely insane, and it happens everywhere, which is quite sad. And that's why you have to be a bit careful with playing earnings, because it's a fucking lottery. I gotta say, earnings, it's a fucking lottery. Unless you have a good thesis prior to that, playing earnings based on just fundamentals or numbers, it's dangerous. It's very dangerous. All right. What's this? What the hell is this? Gaia. Let's have a look. So you will see that most of the stuff that I do in the live is just checking what the stocks do. I look first at price action, and if the price action makes sense along with fundamentals, I will show you later on how I actually decide which stock to analyze and which stock not to analyze. But usually I start with technical analysis. This looks absolutely awful. There has been a bull run, let's call it like that, quote unquote, last year, lasting up until Q4, and from there, that's it. The price is not holding up, and it's going down. This looks bad. It means that the confidence that investors had last year has gone, and that's the reason why shit is selling off. And even though today it's up, it's not enough. I'm not gonna bother. You see what I mean? Just looking at price action alone on this stock, it's not worth, at least for me. So I'm gonna pass on. And what's the other one? AENT. AENT. Weird stock, this one. Alliance Entertainment Holding. Very interesting. Pump and dang. Bam. What the hell is this? Wow. It's crazy, huh? I mean, imagine that you see this there and you buy, and then you watch this selling off by how much? 80%? Almost 80%. Wow. Yeah, it's crazy. No, I wouldn't even touch. I wouldn't even consider a company like this. Not at all. Again, the price action doesn't look attractive, and not for me. So Netflix, Roku, interesting. So the overall industry went up, but overall, it's the same. You see, you have the same decline since the beginning of this year. So just because one day is up, it's not enough for me to say, okay, that's it. Let's go into the industry. Nah, not interested. Prior to earnings, by the way, and this looks bad. There is no support nearby. And if I do this, which is absolutely controversial, some people might say, when you do this with the upward trend lines, oh my gosh, what is this? Technical analysis. When you do this, some people can say, oh, it just bounced on a support line. That's it. Buy. No. Why? Because this shit has been bouncing on this already 2 times, and it's not going up. So the reason why it's still bouncing is because it's probably going to break this line very time. Maybe not now, maybe not in the next month, but it will eventually break the trend line. So when I see a stock bouncing many times, if it does this, from there, can I draw some lines here? If it does that, and then from that, it does this, and then it bounces again, but this time it goes, the high, the peak is lower, and then it goes back again. If I was to see something like this, I would probably short the stock just based on price action alone. Of course, I would go into the fundamentals, trying to understand what's going on, why the stock price is not going up, what's the narrative, what's going on in the company. But just by looking at the price action, if I was to see something like this, it will be enough for me to say, okay, let's go to step 2. And step 2 is looking at fundamentals. And then step 3 is going into the, earning call transcripts, into a lot of stuff. Institutional buying activity, insider buying activity. So yeah, no, not interested. What else do we have? Sorry, I need to drink a lot. I get very thirsty, and I've been going for a run earlier. So yeah, even more reasons. Yeah, the industry overall not compelling. Even, and this is just for the day. Yeah, I'm not even. If we look at the 1 month return, we have 5 stocks that are above sea level, if you know what I mean, and the rest is crazy. Look at Roku, down 20%. Wow, and that was just a month. If we look at the year to date, nah, it's not compelling at all, at all. I don't like that. And the drawdown, well, you can see the maximum drawdown over 1 year is quite big. Not a safe industry. Let's move on. So what do we have? There. Gold. I gotta say, I missed the gold bull run, and one of the things I like in this, when I screen through many industries, is that I get to see a particular industry popping up at the top of the screener many days in a row. And when I see that, that's gold to my eyes, if you know what I mean. Why? Because it's telling me that the market is appreciating that industry, and there is a lot of interest for the stocks within that particular group. An example was quantum stocks back in Q4. I was one of the luckiest individuals to get in before the bull run, and I got in with calls. So that was absolutely insane. I got a very good return in Q4. And was I lucky? I would say yes, but I was lucky because I was looking at things, and I was tracking every day the markets to see what the heck is going on. And, I was lucky enough to see these companies popping up like Rigetti, quantum computing, D-Wave, IonQ. I was like, what the hell is this? I look at the fundamentals. They have no revenue. They have, these are money burning machines. Yes, D-Wave has revenue. It's minimal. They're not going to break even anytime soon. Did they have a target to break even? I'm going to have to revise that statement, because I think they had a target to break even. I don't remember when. I think they had a target to break even. I'm not sure. I don't think it was this year. I do know that they sell these quantum annealing machines, which they are the only ones that are selling that commercially among all the 4 quantum computing stocks. But yeah, so gold. I gotta say, I missed the bull run, and if you see here the companies, some of them they trade in the Toronto Stock Exchange in Canada, even though these are US based companies. So that's why you see them, the ones .to. AU, I missed it. I mean, this was one that I had in my radar for a few days, and then I eventually gave up because I thought that all the uncertainty will fade after the tariff pause, and boy, if I was wrong. So it's crazy. Just look at what happened since April 9th, 20%. So that's 20% in how much? In like 2 weeks. Crazy, crazy. And this stock was up even then. Huh? So even before April 9, even before the sell-off, everybody was buying gold just because of the uncertainty. And if you look at an ETF, so this is the SPDR Gold Trust ETF, just look at this shit. What? Let's see, from Tuesday, April 8th, 15%. Not bad, not bad. So this is an ETF. That's why it's less than an actual stock. I think, is this a gold miner? Probably. I'm not gonna waste my. I don't think I'm gonna buy any gold miner right now. And it's. Is there more uncertainty? I think there is. I think there is. We have the uncertainty around semiconductors, which is no good, to be honest. The range is between 25 and 100%. So that can add another layer of complexity to everything. But after that, we have two right now. So we have the Fed. Is Jerome Powell going to be fired or not? That's one. The second one is tariff from semiconductors. Is that going to be 25 or 100? And then the next ones are a bit long term. So, or close to that 90-day pause on tariffs, which now is 80 days. So yeah, I don't know if there is anything uncertain aside from these two events. Now, can those two events lead to a bull run or a mini bull run in these stocks? Of course, yes. So I'm not sure whether it's worth to analyze. Look, it's trading at $3 this one, and NG rings a bell to me, this stock though. I may have a look. Logo resources. Yeah, it's not compelling. I gotta say, the chart looks horrible. Are insiders buying NG? No. Fuck this. Not a chance. And they are in, miners. Nah, not compelled. Even though people bought, they bought a dip, which you can see there in the volume chart. Volume was up by 3 times over the average. So yeah, nah, I'm not gonna buy any gold miners right now because the price is way too high, and the uncertainties. We still have 2 more uncertainties, but I'm not sure if I'm willing to bet on this because I think I'm gonna be buying right at the top. So let's see, Royal Gold. Over the past 5 days, we have one. Okay, that's nothing. 18% Contango. I heard about them as well. CTGO. I heard about them as well. Wow. Oh, well, that looks bad. Yeah, there is a support there, which, and insiders, CTGO. Yeah, they bought 25, yeah, so why is this not in order? Okay, so we have March, we have April. So CEO bought about 150,000. He's the only one. I need to see more than one. I need to see at least a few, 2 or 3 insiders buying upwards of 100,000 before I can even consider that as a signal. Just the CEO, this might be a bonus that he just throws into the stock to show that he's confident in a turnaround. Although yeah, he bought on the 25th and on the 1st. Let's have a look at the price. 25th. Oh wow, he's good. 25th, there we go. He bought at around 9, and on the 1st at 10. So his average cost basis, I think it says here, yeah, 10, approximately 10, 9 to 10, and the price is about 13. Wow, legit, not bad, not bad. So this was good. Somehow he knew that all the madness around tariffs. This guy was smart, huh? Let me tell you that. This guy knew that the tariffs, that uncertainty surrounding tariffs, will lead to an appreciation of his stock, simply because he's a gold miner. Probably he has a lot of gold in reserves, and that will lead to an appreciation of his stock. Very smart guy. How much did he win? More or less 30, maximum 45. But he didn't sell, which is a mistake. I believe that might be a mistake. Yeah, you can see the price bounced on this resistance. So yeah, I don't know. You can see whether he sold or not in the activity here. So if he was to sell anything, you will see it here in the Open Insider website. Not convinced. The RSI shows overbuying activity, and I believe the stock is going to sell off. For example, today is down 5%, which is weird because today it was a day when buying the commodity stocks, even though this is probably a minor, makes sense, because you are running away from equities and you're trying to protect yourself. So yeah, it's weird that this was the worst performer today. Yeah, it was the worst performer. Interesting. That's why I say, it's a gamble right now, and I'm not willing to take a gamble with gold mining companies. It's not my style. It's not my style. It might be legit for some type of investors, not for me. Not for me. But yeah, if I had what it takes to buy earlier, when I saw gold appearing here at the top every day, pam, 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 every day gold was up. If I had what it takes to buy then the story would be different. Right, so grocery stores over the past 5 days. Let's see over the past 5 days if anything is up. Precious metals, not a surprise. People are running away, as I said, into commodities. Tobacco is up, of course. You need to smoke if you have if you see your portfolio down, you gotta smoke, man, because otherwise, how are you gonna go through that? Nah, joking aside, the reason why tobacco is up is because they pay a fat dividend. Let's have a look. Philip Morris. Philip Morris, how much do they pay in dividends? So Philip Morris, if you go to look at that. Over the past 4 years, the average yield was about 5%. That's good. And the last year was about 3. Next year is about 3%, 3.3. It's not a lot. How about the stock? I think they had a good year. Philip Morris. Yeah, they had a... Holy shit. It's crazy because the reason why this stock is, well, it's not attractive to me, is because people are running away from cigarettes, like the usual consumables. That's how they call them in their 10K, and they are smoking these e-vapes, which I think they call that a smokeless segment. I think they sell some of those e-vapes, but the problem they have is that in the US there is a lot of illegal vapes, a ton of them. By the way, they're coming from China. Maybe that's why they're up. Is because importing those illegal e-vapes from China is now expensive. But if you import something illegally, do you pay tariffs on that? I don't know. It's not easy to know what to do with this one, huh? It's an interesting. I gotta say, huh? Oh, earnings coming quite soon. Hang on, that's this Wednesday. Shit. This is at the stock is at all-time highs. Not bad. Should I do analysis on Philip Morris? The chart looks good. I gotta say the chart looks good. Is this buy the rumor, sell the news, and you sell on earnings? Maybe. I don't know. But this stock is up by 10% since Liberation Day, more or less. And it's holding up. Unless unlike semiconductors. Semiconductors are completely battered. I mean, just have a look at NVIDIA. Of course, NVIDIA has a major problem now with the H20 chips, particularly with the export controls requiring new licenses for the exports of those H20 chips to China and other sketchy countries. I think these are called the D5 or C5. I don't remember that category. But this looks bad. I mean, just like the difference between NVIDIA after that rumor came up, on the 7th of April. And just look at this from the 7th of April. Not bad. Could be a play. Could be a play considering the uncertainties in the market, huh? Wow. Last earnings was absolutely insane. 10%. I may do some. I remember I did analysis on Philip Morris. I think it was maybe even before. I don't remember if it was after earnings. But I remember I checked this company once, not in depth, but I checked it enough. I'm compelled, I gotta say. I'm quite compelled on Philip Morris. PM. Let's have a look at the fundamentals very quickly. So annually, revenue up in the high single digit in 24. Okay, that's fine. Which is good because I think the number of people that are smoking is decreasing quite a lot. Smoking, I mean the consumables and not the actual, sorry, right? And not the actual e-vapes. E-vapes is going up and consumables is going down. So that's the overall trend. Gross profit up. Operating income up as well. Well, up. It's down in the mid-single, but it's not concerning. I mean, compared to 22, it's still fine. Even compared to 21 or 2020, it's even beyond 20. Interesting. 2020, people didn't smoke that much, which is crazy because that's when you had the virus. People were stressed, and you would think that they would smoke more when they're stressed. It was not the case. Net income. Ooh, this is where things are turning south. Yeah, doesn't look compelling to me. Yeah, so they are increasing revenue, but they are losing net earnings. I don't like that. I gotta say, I don't think this is a company that dilutes investors. Let's just have a look. Where is it? There you go. Yeah, it's constant. They don't dilute investors, of course. They have plenty of money. I believe that's why they pay a high dividend, because they have plenty of money to spend on dividends. Particularly, how much they have? 4 billion. I thought they had more. 4 billion in cash. Okay. How much they're making? So 12 billion in operating cash flow last year, which is crazy. And free cash flow, 10 billion. Not bad. CapEx is quite low. I believe they have everything set up already, all the factories, all the distribution centers. So yeah, CapEx, it's probably the trend it's not concerning. Yeah, they've been spending more on capex since 2020, but it's just 1.4 billion compared to 12.2 that you make in cash from operating activities, which is quite low. So, all right, it's looking good. We got decent free cash flow. It's quite inconsistent, I gotta say that, which means that the dividend is gonna be inconsistent. So let's see. There you go. Dividends, how much they paid in dividends. Yeah, about 8 billion last year. 7.9 in 23. The dividends were stable. So those dividends, all right. Now I know why people are buying this. Now I know why people are buying this. It's because the dividend is stable. Look at that. The company is not diluting investors. So the share count is the same. When it comes to the dividend per share, it's going to be, if you don't modify how much dividends you pay, the ratio is going to be similar because you're not diluted by the company issuing more shares. And this looks really good. So total dividends paid, 8 billion a year. Not bad. What's the dividend per share? I think I have, I usually use Seeking Alpha for that. So PM. Let's see. Dividend yield, dividend history. There you go. They pay $135 per share. That's how much they paid, and that's quarterly. So yearly they pay 4 times that, which is got to be five something. $5.5. I don't know. I'm not good with math. Did I say that I'm an aeronautical engineer? Don't worry. My day job is I deal with a lot of bullshit. I prepare these multicolor background presentations. I usually tend to overblow, the digital transformation and the importance of having these digital plans and all these digital processes. It's a lot of crap, it's crazy. I work as a consultant, by the way, for an aerospace company, and it's a lot of BS. Crazy. You will be surprised. You'll be surprised, by the amount of bullshit that you have in the industry. And the waste. Oh, the waste is insane. There is some consultants that is. Not just on raw materials and anything else. All right. Tobacco is good. So Philip Morris, it's significantly more compelling than Altria, and that's Turning Point Brands. All right, let's do Philip Morris. That's it. Let's do Philip Morris. I'm quite compelled about it. Let's try to understand what's going on. So, Philip Morris are this. Let me just clear up the tabs. I'll leave the screener there, and let's try to understand why the company is outperforming. And Philip Morris over the past 5 days is up 5%, over the past month 6%, over the past 3 months 34%. 34%. Wow. This seems to be a defensive stock, I gotta say. It seems to be a defensive stock. Let me just have a look if there is anyone online. Probably not. I hope the stream works. I really hope so. It should work, I guess. But yeah, I didn't announce the live, so it's normal that people are not turning in. I have 30 subscribers. Who the heck is going to turn into these lives? So Philip Morris. Let's start with the first thing. So insider buying. Holy fuck. Who is this? Who's this guy? He owns also another company, SBGI. What's that? SBGI. Sinclair. What do they do? Media company based, it's a media company in Maryland, active in the US, local media and tennis. What? Providing free over-the-air programming and live local sports events. This segment operates notable networks. Charge and DVD. Single charge revenue from advertising sales on its television stations. What? I can't believe it. Let's see how is the stock doing? Year to date. It's selling off. So this guy, I believe, is also the executive chairman of SBGI. Yeah, he is. Wow. Very interesting individual. So let's have a look who's this guy. Wikipedia. Okay, so son. The first Donald Trump presidential administration, chairman of the Federal Communication FCC Media Ownership Rules. Okay, so the guy is involved in the media industry. Interesting. Sinclair was currying favor with the Trump administration in exchange for deregulation of the industry. Oh shit. That's crazy. We're here to deliver your message. That's insane. This part is good. Wow. All right, so this guy fucks. In the good sense, because he bought at the right time. I gotta say, what was his average price? Sorry, Philip Morris. Let's go back. Let's go to Philip Morris again. PM. Why am I seeing SPGI? Let me just see something. There is something weird here. PM Sinclair Incorporated. What? No. Philip Morris is PM, yeah? PM. Okay. In any case, there is insider buying activity on the 20th of March, which makes sense. I mean, this guy bought prior to the uncertainty and he knew that the stock would rally. So it might be a good stock to run away from the equities. It might be a good stock. All right, let's focus now on the news. So I'll go to Seeking Alpha and I will open pretty much anything relevant in regards to Philip Morris. So what do we have? Earnings week. Yeah, we know it's this Wednesday. We got Seeking Alpha Quant, rating some staples. No. Let me just open the news section, by the way. All right, so tobacco's big winner is expected to keep rallying. Huh. Okay, so they have limited exposure to tariffs and lackluster outlooks in other consumer sectors. Interesting. So they are not that exposed to tariffs. Why? Let's see. So it has been a big winner in the tobacco sector, 30% year-to-date rally. Okay, we know that. Bank of America said it still sees Philip Morris attractive defense name with growth appeal. It is. It's a growth stock. This is not a dividend stock, which is what I initially thought about them. So the firm upped its price targets to 175. How much are they trading right now? PM 162. It's not a big upside, but I don't usually trust these estimates. 22 earnings. Okay. Okay. Consumer peers is now closer to mega cap consumer peers, Procter & Gamble and Coca-Cola. Mondelez International. The premium is warranted due to the strength of PM's operations and the positive outlook. We're going to look at the outlook in a moment to see what it is, what it means. Okay, CPG environment has a defensive portfolio and benefits from a weaker US dollar. Of course. Of course. Of course. So if we go to revenue, that's good. That's good. Holy shit. The Americas, they count for last year, yeah? So if you look at revenue per country, Europe is number one. Shit, I didn't know that. Then you have South and Southeast Asia, 11 billion. Americas, which I believe it's North America, or is it? It's not. I believe Americas, it's everything. It's South America as well. It's only 4 billion. Oh my God. What? So most of the revenue comes from outside of the States. Of course, and if the dollar is weak, that's good, because if you make revenue in euros and the euro is stronger than the dollar, when you get the euro back into the dollar, you're going to get a lot of dollars, so that's good. Holy shit. Yo, this is the interesting company. Looks compelling to me, huh? Looks compelling to me. So we got the dollar. So we got so far. It's not as exposed to tariffs because I believe they have production plants outside of the States, and they benefit from a weaker US dollar. So robust PM smoke-free growth, along with modest growth in combustible sales profit. Okay. Highest among mega cap highlighted. Okay. In terms of quantitative analysis, ranks top 4% of all consumer staples. Yeah. All right. Shares of Philip Morris were up. Okay, that's it. So we learned something. Let's see, what else can we learn? 10 dividend stocks with strong. 10 stock to buy. Tobacco smoke signals. Investors may benefit from tariff environment while consumers lose out. Let's see. Tobacco sector is impacted by tariffs. Okay. Due to the higher costs for imported tobacco products such as cigars and other products. Makes sense. President Trump's recent tariffs imposed a 10% baseline rate on imports from countries like the Dominican Republic. Okay. Honduras, Nicaragua. Nicaragua, it has an 80% tariff. Wasn't it Venezuela that was the one that was not a good friend with the US? Interesting. Okay, higher tariff costs have been successfully passed on to customers. I don't think you'll be able to pass a full 10%. Not a chance. Which has left the tobacco giants relatively unscathed. Reports indicate that may be the case with the most recent tariff actions. Okay. Looking further ahead, analysts have warned that companies importing raw tobacco or finished products that faced increased operational tariff-related expenses could reach a limit. Exactly. I don't think you'll be able to pass the entire 10%. Not a chance. Not a chance. Over the last 6 weeks, PM's... all right, all 4 tobacco stocks have outperformed. What's the other one? BTI. This was based in the UK. Let's see BTI was doing. BTI is based in the UK. Yeah, it's doing the same. It's doing the same. I also did analysis on BTI time ago. Was it Q3 last year? Ooh, BTI looks even more compelling. Wow. Okay. I think this looks like an interesting stock to donate my money to Wall Street. You know, uh, let me just adjust myself because my back is hurting. There we go. BTI looks more compelling from a price perspective. Why? Because it's not trading at all-time highs and it's based in the UK. Let's see how much they sell to the US. BTI. Hopefully, it's going to be less than how much is Philip Morris? They're selling 4.5, which is in the entire America. So Americas. Go figure what that is, because that includes South America. Yeah, they have the same Americas. Americas. Holy shit. They mostly sell in the US. That's not good. So most of the revenue comes from the US. And then the rest of, Americas and Europe is 11 billion. But most of their revenue comes from the US. That's bad. Because if you are importing cigars from UK, I don't know where they build this. I'm gonna have to do an analysis on that. But even if you have a factory in the States, you have to import the raw materials into the US, and that's bad. So it doesn't matter if they have a factory in the States, because they're gonna have to import the green tobacco anyways into the country, and that's gonna be subject to tariffs. Let's see. Is it? Yeah, because they don't import it from Mexico. Yeah, they probably import it from those South American countries, maybe Colombia. Yeah, this doesn't look compelling. I gotta say, it doesn't look compelling. They sell too much into the U.S. And this, Philip Morris, most of what they sell, it's to Europe, which is weird. An American company is selling in Europe, and a British company is selling into the US, mostly to the US. Right, let's go back to Philip Morris. I'm not compelled by BTI. Fuck that. I'm definitely not compelled about that. Price action looks good, but that's pretty much it. So, what were the other ones? There we go. So we had, I think there was another one based in Japan. Imperial Brands, Philip Morris, Altria. Altria was the other one. Let's see what the stock is doing. I think they were battered. No. And this price action looks quite attractive, to be honest. Holy shit, this looks actually very attractive. The share price is trying to break this, call it however you want, the resistance. I don't know, is this legit? Is this a line where it's there or here? Who cares? Somewhere around mid-high 50s. But yeah, I like this. When the share price is bouncing many, many times into either support or resistance, it means that investors are considering, should we break this line and rally? And if this happens, it can be quite of an opportunity, this one, huh? Holy shit. It looks better, I gotta say, than Philip Morris. I gotta say, I'm not really keen on buying at all-time highs, because this looks to me undervalued. Overvalued. Let's do analysis on Altria as well. All right, let's finish with Philip Morris and then we do Altria. So we get, okay, stay defensive. Okay, let's see any other reasons that we don't know yet. Okay, Trump rate Wednesday. Was this? Okay, April 3rd, yeah. You got a baseline of 10%. Stay defensive by focusing on stocks that have strong cash flows. Okay, tobacco stocks, they have strong cash flows because that's why they have a crazy high dividend. A long history of growing their dividend. Yes, that's the case for Philip Morris. Let me just have a look quickly. How much they grew their dividend. PM, sorry, PM. How much they grew dividend over the past years? Dividend yield growth. That's not too much. Compounded annual growth over the past 3 years, 2%. Over the past 10 years, 3%. Wow, that's quite conservative. Yeah, you see, it's barely up, barely. It was $1 in 2017, and it's $1.35 now per quarter. Yeah, and of course, this is just the regular. Do they pay special dividends? I don't see any special dividend here, so I think they only pay. Yeah, they only pay regular dividends. Yeah. Interesting. Okay. Procter and Gamble. I wouldn't buy those kind of stocks. I don't know. Q2 or Q3 recession is very possible. Yes, I fully agree with that. I couldn't. Yeah, I will be honest. I do believe that shit is gonna hit the fan in the States in Q2. I do believe so. Particularly if the upcoming tariffs on semis, that's gonna tank the entire industry. And should I short semiconductor stocks? Maybe not, because the uncertainty is so high that you don't know if the tariff is gonna come up at 25%, at 50%, at 100%, or at 5%. You don't know it because it's all over the fucking place, and it's I don't know, playing the lottery tickets on this kind of bets. It's too uncertain to say anything. So I don't know. I'm not planning to short any of these stocks. Believe Trump will pivot, focus number of companies that are making significant investments in the US, but it's okay. Nothing new. So what I'm looking for, by the way, with this, I'm looking for all the news that happened since the past earnings release. I'm trying to familiarize myself with the company, and once I do that, I will go into the earnings and I will try to learn what's actually going on with the company. So let's go back to, holy shit, when was the last earnings? In January? Yeah, February. That's a lot of news that we have to filter through. So let's do this quickly. Okay, now this consumer staple could weather, stay defensive. Yeah, we already know that. Best and worst. Okay, now. This is interesting. This is a piece of news that I want to know. So FDA youth prevention campaign linked to significant decline in e-cig, so these are the e-vapes use. So the US FDA program that is designed to stop youth from using e-cigarettes, the Gen Zs, of course. Who do you think is the main customer for this product? It's not going to be a boomer, or yeah, it's got to be the Gen Zs. Had prevented hundreds of thousands of them from starting, according to a new study. I don't know if we're to trust the study. The campaign, known as The Real Cost, began in 2014 with the goal of educating youth between 12 and 17 about the dangers. Okay. So essentially, you scare the hell out of these guys, which makes sense. You know, it's good. It's good to not smoke. Don't get me wrong. I don't smoke. I never did. Never will. So, makes sense. The study, published in the American Journal of Preventive Medicine, found that the campaign prevented an estimated 444,000 youth between okay. E-cigarette makers, yeah. Altria, BTI, and Japan Tobacco. These were the other ones. Jap AF. Oh, liquidity is low. What the hell is this, man? This is a daily chart, by the way. Oh, forget about that. Liquidity is... What the hell? Forget about that. Right. FDA, is this significant? It's not. I will be honest. It's not significant. I wouldn't short the company based on this news, you know. There is a link to the study. And of course, the link is by the FDA. Nah. Because now it's got to be an independent, truly independent study. I don't like the studies that are linked to an organization or to a company, because those are studies usually are not very objective, in my opinion. Again, I'm very cynical, so it's my opinion. CPI read, tobacco prices run hot again. Tobacco, oh, interesting. So tobacco is part of the CPI, yeah? Prices of tobacco and smoking rose compared to a year ago. Overall core inflation was 3.1. Tobacco and smoking products. Let's have a look. CPI US. Can we actually see that? Yeah. They're up. Interesting. There you go. And I believe, yeah, you can see here the CPI by product. So if I go to CPI data, maybe if I do, where was it? Here, Control C. Oh, 1980s. Shit. Nah. Main categories, of course. Yeah, this was, from that truth that I showed you before, with Trump saying that, inflation is down. It's down on energy. Of course, it's down on energy because you have March 25 data. You don't have April, So, I'm not going to try to find this CPI data for tobacco. I think is it going to be really relevant? CPI data, let's see, database. One screen, all urban consumers. Yeah, current series. Area, item, tobacco. There you go. Tobacco and smoking products, area, US city average, of course. Yeah, bam, bam. Get data. There you go. So this is, yeah, we've seen before the numbers. Can't I see them in a chart? I don't know. Tobacco in the US, the average consumer not seasonally, and this is seasonally adjusted. Yeah, let's have a look at Excel. Let's see, bam. This is not gonna be easy to plot this. Do I have to? Well, in any case, numbers are going up. Let's leave it there. Numbers are going up. Numbers are going up, which means that the city average, US city average. All right. So despite an increase in inflation for tobacco products, people are still buying. So they are able to pass on the costs, which is interesting. Okay. All right then. So I take the face value of this statement, rose 6.6% in February compared to a year ago. So that was the table that we saw before. It's quite a big jump. Don't get me wrong. Tobacco smoking were up 0.6%. Yeah. And also generally positive that Philip Morris International could see the benefits in the Trump administration. The loosening of some regulations, I don't know, and oversight is seen as helping the sector. I don't think Trump is going to go on TV and say to the youth, to the Gen Z, go on and smoke as much as you want. Come on. And it's not going to, I don't think it's going to loosen up the regulations around educating people on why they shouldn't smoke. I don't think that's going to be, yeah. Let's see, what is this guy, Kennedy? Stance on the tobacco industry and its products, particularly regarding international products and marketing practices, is seen as likely influenced by his focus on public health, preventing youth exposure to nicotine. Yeah. However, it's unclear if he will push for strict rules and regulations. I believe he will. That's why I don't think that the company is going to be exposed positively, by the new administration. I don't see that as a particular tailwind. I don't buy that. That deregulation is just BS. That I think it was used, back in the days to get the votes during the campaigns. But yeah, I really don't think that deregulation is a tailwind for Philip Morris. I really don't think so. What else do we have? Insider trades. We've seen that before, yeah. So you got the data here. That was the chairman of the board. This guy bought. It's not a lot. 75,000. That's disappointing, man. 75,000 he bought back in March, which is peanuts compared to the amounts he bought in other companies. This SBGI. I'm quite compelled to understand what is the relationship between these two companies. Let me just have a look. I'm way too curious on what's going on there. Can I use ChatGPT? Is this legit? Yes, it is. So SBGI stock. Let's see if I know how to type. And Philip Morris stock. Yeah. So what is the relation between these two companies or stocks, whatever? Is there any? There isn't anything. No. So this is a media company. Yeah. The company is involved in broadcasting, digital media, and emerging technologies. Yeah. So Philip Morris, they do tobacco. There is no publicly disclosed business, financial, or strategic connection between these two companies. In fact, I'm just going to do something really quickly. So if I go to the company, let me pull up a 10K. Philip Morris, this is why I love American companies, because I can go to the SEC website and I can pull a 10K. Ooh, there is a prospectus. I don't like that, generally. So that's another thing that I have to analyze. Let's go to the form. 10K. Bam. We got the latest one. Philip Morris. Yeah, let me just double check this is the company. 10K. That's the one. Annual reports. What was the name of that company? Sinclair. Sinclair. Yeah. Sinclair. Yeah. Nothing. So I don't think they're related at all. Which is weird because this guy just bought 75, whereas in the other company he bought millions. And he's the chairman of the board in both companies. Smith David. Is he still? Let me see. Smith. Let me see if I do a Control F. Usually the 14A shows that information. So Smith, yeah, is the 14A. So sorry, 14A. There you go. Convenient. Convenient. It was just released. Smith. Can I do a Control F on this? I think I can. Is he still the chairman of the board? COB? Chairman of the board. Hey, that's not the same guy. What's this then? I don't get it. Did he change positions? So he's no longer the chairman of the board in PM since March. Can't believe it. Let's have a look again. So this guy is the chairman of the board. This guy, and that's Philip Morris International. Correct. Okay, so this guy is the CEO. Jacek Olszak. Okay. Where am I going with this? I need to understand what's going on. That Smith guy is not in the 14A. Okay, let's do a quick research on the internet to see what's going on. So let's go back to the guy. Smith David D. Bam. Was he the COB of Philip Morris? Check internet, latest sources, April 21st, 2025. If you're a G, you know why I put this April 21st. If you're a G, you know that. Otherwise, yeah. So this is the chairman of the board for Sinclair. But there's no public record of credible source linking him to Philip Morris. What? So why do I see this in Open Insider? What the hell? I don't get it. Let's go back to the Insider trades and type Philip Morris. That's the one. We've got the guy, Lars Dargen. So we have the president. Let go of some shares. Okay. So Lars. Who the heck is this Lars? No, we don't have anything. Tickers. PM. Go. This. Philip Morris. Maybe just R. Just one R. Man, I'm so bad typing these companies. Philip Morris. There you go. Just a Control C, Control F guy. No. PM. I don't know what to say now. I want to see Philip Morris, but for some reason I see a lot of information from CBGI. This is weird. Anyways, I'll move on from Insider Buying because I'm spending way too much time on that. Maybe not that relevant. But this guy was not the chairman of the board. So Philip Morris International. No, nothing. So the data from Open Insider is wrong. What? That's not possible. And if I look at others, I think this is I gotta pay for this now. PM Philip Morris International. I think I have to pay to see this data now. That looks bad. February 25, a lot of people selling. Yeah. Sale. This was the guy. He sold. Man, I will be honest, this doesn't look good at all. Insiders have not been buying the stock. So if they didn't buy, it's not as compelling. Anyways, let's keep on with the analysis. So we know that insiders have been selling and Open Insider data is wrong, which is weird because I used to trust that site a lot. Anyways, we got a dividend. We know that 135. Philip Morris is expiring a sale. Holy shit. This is huge. Okay, they're selling their cigar business in the US. The cigar business was picked up by Philip Morris as a part of the deal to acquire Swedish Match AB in 23. Okay, so that's how they got it. Sources indicated to Bloomberg, that's a rumor, I like rumors, I love rumors, that a potential sale is part of the company's strategy to focus on smoke-free, exactly on the vapes. You see what I mean? You see what I mean? This is exactly what I like to see. The company transitioning from combustible, which is the usual cigarettes, they transition to e-vapes. And that's where the new generation, is apparently heading to. They don't like combustibles because they're freaked out by the consequences, which, by the way, e-vapes, pretty much the same. So, not much difference, but okay. Currently, Philip Morris is working with advisors to determine buyer interest in the US cigar business asset. Over 1 billion. Holy shit. Yo, this is a huge catalyst, huh? Okay, I'm quite compelled now on Philip Morris. If realized, this is a huge catalyst. 1 billion. Okay. 24. And remember, Philip Morris, I think how much was the revenue? I don't remember now, but in the US was about 4 billion a year. So that would be a good add to the revenue generated in the US. Anyways, Philip Morris, international consensus buy rating. Okay, that's it. So what we know so far, the rumors that they're trying to sell the cigar business. Okay, that's good. We know something. What else? That's it. Profit guidance ahead of PAX is full year profit guidance. Okay, so they reiterated, pretty much reaffirmed guidance ahead of a presentation on Wednesday, and that was on February 19th. Yeah, not much happening. If they reiterated guidance after April 3rd, that's when I would be a bit more compelled with the company. But if it's just on February 19th, it's not enough. Okay, so to cover the company's progress over the past decade to deliver a smoke-free future and the financial model, company's superior returns to shareholders, potential opportunities for the company's smoke-free brands will also be discussed. Okay. So they had a conference and this is the earnings. That's it. So the first part of the analysis is done. We got, what we have so far. We have the price action. The price action looks good. The stock price is hitting all-time highs, and considering the tariff drama, it seems that investors are running into these defensive stocks. So Philip Morris, it's pretty much at the top because it's no longer a dividend stock, but it's more like, a growth stock, even though it's in the tobacco industry. So that's not in the semiconductor AI industry. Anyways, next step. Let's see what's going on. Transcripts. Oh, we got a few conferences. So we got this one, and we got the call transcript. So what I'm gonna do now, let me just save it. Yeah. So let me just pull a Word document to quickly save this. So what I'm gonna do really quickly, I'm gonna copy this. You will see that this part is gonna be cool because I'm gonna use AI to analyze this shit. And do you think I'm gonna read an earnings call transcript? Ha! I usually read it, but with a Control F, not with in the way that you think. Because I analyze so many stocks in a day that it doesn't make sense to spend too much time on a stock. So let me just go here. Bam. Okay, so we got folder and we got the call. So this is the call transcript. I got it. Bam, saved. Good. Next thing, let's go to ChatGPT. So what we're gonna do now is something very interesting. I'm gonna pull the folder that contains the prompts. So let's look first at the positives, yeah? This is a long process. So what I'm doing here, I'll explain later when this thing is thinking. All right, let's do the first step, which is desktop. We're gonna do call. We got a call. We got a call. There we go. Bam. So I'm gonna upload the call. Hopefully my internet hasn't hasn't died. Oh shit, unknown error. Okay, that's compelling. Let's do it again. There you go. So what I'm doing is a multi-step reasoning process. So essentially I'm asking the AI to analyze the prepared remarks in this first prompt. Yeah, so that's step one. Check out the prepared remarks. Step two, I'm asking the AI to check for the Q&A. So the Q&A session, the AI will go there and it will try to find, what's going on there. And by the way, here I'm looking at the positives. So I'm looking at anything that is considered as upside. In another chat, I'm going to be uploading everything that might be considered as a negative. This is 4.0. Shit. Sorry. I have to do that again. Kill me. 4.0 is quite shit, to be honest. I used to like it a lot, but now I noticed. Look, and I did a mistake again. 4.0 high is the one you're looking for. Why? Because back in the days, they used to allocate a lot of processing computing power to 4.0 because everybody was using 4.0. But now that people are jumping into 0.4, the computing power is more focused on this model, which means that the output is going to be more professional and it's going to be more accurate, even though it's going to take longer to analyze, which is the part where you have to be patient. So that's step one. Again, here I'm analyzing the upside, from the pre Q&A. You can see we're gonna read this in a moment in details. That's step two. So here I'm analyzing the Q&A. And step three is to put everything together into a list of 5 to 10 different upsides, different drivers. I'll call them like that. And then I will analyze what are the most important ones. Great. So, in the meantime, I think we can read some of these. First one, scale and profitability of the smoke-free business. You see, the company is emphasizing smoke-free. I don't think they're keen on combustibles, even though, let's be honest. Check this out, yeah? If you look at revenue, most of the revenue, and by most, it's like over 50%, comes from combustible tobacco. So smoke-free, it's not as important. And by the way, smoke-free involves not just the vapes, involves chewable tobacco. I think it involves these weird patches that you put in your lips. I don't know. It's weird. But it involves a lot of products. We're gonna see that in a moment. First, let's do the earning call thingy. Is how I like to call it. So let me just check something. Right. Let's go back. There it is. Great. So these are the overall, these are the overall growth drivers. Perfect. We're gonna go into more details in this section. I believe these were the top 5. Yeah, there we go, top 5 or top 6 growth drivers. Now we have to do the next part, which is the challenges. So I'm going to focus now on anything from the earnings call that may be considered as negative. Yeah, so first step, we're going to look at the prepared remarks. I'm going to upload the call. Step 2 is going to be analyzing the Q&A, and this part is important because this is where analysts are going to roast the company. They're going to roast management on absolutely anything that is not clear from the prepared remarks. And this second step is key because it's going to tell you where the company is struggling. And for the moment, I'm just gathering the data, and then I will analyze everything. Because it takes a bit of time. Let's go to the next step, which is analyzing the business of the company. Exactly, because you need to know what the company does. Even myself, I look at the company before and I have no clue what the fuck they're doing now. That was poor analysis, I gotta say. That was poor analysis. Business. There you go. You see, so the 10K contains a part called business. That's exactly where I'm going. Page 1. There you go. Now, let me just kick in the second part because this is ready. And I'm going to prepare the third prompt. I already have a lot of experience with this. That's why I'm able to juggle everything at the same time. So, do you really think now that I'm going to read all this shit? No, not a fucking chance. I go to this thing. I copy the item 1. Should I look for more stuff? Just this part. Yeah, so just this part, yeah. Control C, bam, Control V. And I'm going to get a quick snippet. I don't know how you call it. This is like a Control C, Control V on a prepared script that I have here. So this is going to summarize this part into how many bullet points? I don't know, 5 to 10. All right, let's see what I'm doing. So, based in Virginia, it's an old company, became public in 2008, and they are trading in the New York Stock Exchange. Okay. Since 2008, they invested over 14 billion in smoke-free products. You see, the narrative of that smoke-free, it seems that it's ingrained in the company. Yeah. 14 billion. Is that a lot? I don't think it is. How much is the company making per year? Let's see again in the cash flow annual. They're making about 10 billion approximately. The median is about 10 billion a year. So yeah, it's like a year of operating cash flow. It's a lot. This 14 billion is not insignificant. Okay, so to build labs for safety tests, clinical studies, and market research to help adult smokers. Adult, sure. I'm sure that all of those smokers are adults and not teenagers, Gen Zs. November 22. Okay, they acquired this Swedish company. And you remember the cigar business? The cigar business came with this Swedish company. You see, this is why it's important to read the news. It's because you can link, you can build knowledge on top of things, and the business makes sense. Zine nicotine pouches. This is the weird thing I told you about. People, they put them. Is this yeah, you see, people, they put this thing under their lips or something. I don't know what the heck is this. Weird. Lip. Let me see. Yeah, this thing. What the hell? I don't know. Weird stuff. That's why I never started smoking, because then you're fucked with these things. Following that deal, the US cleared for the sale, yeah. The FDA authorized the IQOS device that is further modify risk order, meaning the product to show lower health risk. What's that? IQOS. Is this e-vape or a tobacco heater? We'll see that in a moment, but I think this is to heat tobacco. Heats tobacco, you see what I mean? This is not an e-vape. So you still have tobacco inside. It's not, yeah, that's not good. It still has tobacco. All right, April 30th, Philip Morris ended its US partnership with Altria. Interesting. They were on a partnership with Altria, which seems to be a competitor. From that date on, Philip Morris holds all US rights to sell the device. Good. That's good. Okay, starting 21, company moved into wellness and healthcare, of course. Developing oral and inhaled products for pain and heart care. Prescription inhalers and cannabinoid-based items like CBD. Near-term sales are expected to be small. Okay, that's nice. Or combustible nicotine products and a smoke-free business. This includes heat. That's what we saw before. Heat non-burn. I'm not convinced about that. E-vapor is the one that's interesting. And oral smokeless is those pouches, nicotine pouches. Let me just check this. And let me just run that last script. Okay, so the company aims to produce solely at adult smokers and works to keep them away from youth and non-users. I'm sure they do that. I'm sure they do. IQOS uses a handheld heater. Okay, so this seems to be an important product for the company. It's mentioned quite a lot in the description. I wonder how many sales this thing generates for the company. The tobacco sticks go by names like Heats, Blend, Cynthia, and Terea. A tobacco-free version is called Levia. Okay. So this was launched in Japan. Smoke-free products were sold in 95 markets. Nicotine pouches in 37. Okay. The company's cigarettes reached roughly 170 markets. Wow. Which is pretty much all over the world. So, all right. Marlboro led the cigarette lineup, making about 40%. Wow. Of 2024 shipping volume. Chesterfield, LM, and Philip Morris brands brought the top 5 to around 80% of total cigarette shipments. So these are the brands that you have to take into account, yeah? So Marlboro, Chesterfield, LM, and Philip Morris. Okay. DJI, isn't this a drone company? In Indonesia and Fortune in Philippines round out the portfolio. That's it. It's a small portfolio for combustibles. Great. Easy to understand. I like that. I like businesses that are easy to understand. Source of funds, dividends, where a legal entity is separate and distinct from indirect subsidiaries. What's that? Let me see. Source of funds. I'm just curious. I'm going to use 4.0 because I'm going to get the rate limit for this meeting. Okay, so it's a holding company. It makes sense because it owns several brands. Most of its money comes from its subsidiaries. Yes. Dividend payments and debt repayments from those companies. Yeah. If one of the subsidiaries owes money to their creditors, those debt must be paid before Philip Morris or its investors can access any of their subsidiaries' earnings or assets. As for now, the main subsidiaries are not restricted by any long-term agreements that will stop them from paying dividends. All payments must still follow local law. Okay. Not very relevant because the company is not about to go bankrupt, so I wouldn't spend too much time. Description of business, there you go. Let me see again. Quickly, we are understanding what the company does. So Reorganize its reporting structure. Okay. Integration of Swedish match into existing operations. So we got Europe, South and South Asia, Americas. Connecticut covers the United States, Canada, and Latin America. This is the problem. I want to see the fucking US alone. I don't want to see Latin America as well, because that area is giant. How many countries are there? Like 20, 30 countries? I don't know. There are a lot of countries there. So, yeah. The fact that they don't disclose US sales is not very encouraging, to be honest. It's probably not a lot, because if overall it's only 4 billions in the Americas, the US might be a third, a fourth of that. So not a lot. Wellness and healthcare stay the same, but after the sale of Vectura Group, okay, the company moving to the Europe segment. Okay, fair enough. Shipment volume. Okay, so cigarettes and heated tobacco grew up. They don't make a distinction between cigarettes and heated tobacco. Everything is all together. Not good. So I want to see the cigarettes only, not just both. Heated tobacco units alone grew from 125 to 139. Okay. And the Marlboro shipments rose by 3.7%. How about the others? Cigarettes, there you go. That's the market share. Wow, that's a lot. So the company has a 24% in the cigarette segment, and in the heated tobacco, 5% market share. And this is international, huh? So PMI, cigarette over cigarette market share. Marlboro cigarette over cigarette is 10%. Okay. I really don't know what that means. Cigarette in market sale volume as a percentage of total industry cigarette sale volume. Got it. Excluding China and US, but including cigarillos in Japan. All right. So Marlboro alone is 10% of the market share, essentially. Not bad. And the total market in billions, excluding China and the US, is 2.6 trillion. Not bad. So the market share is at least 15% in approximately 100 markets. Wow. These are a big company. Distribution and sales. Okay, so that's going to be through direct sales to shops, to retailers, distribution to independent distributors, yeah. Okay, e-commerce infrastructure for product sales to trade partners. These are B2B. Our own brand, retail infrastructure, yeah. Exclusive certified distributions to independent distributors, yeah. So they're B2B, okay. Competition, of course, you got the big four tobacco companies, Altria, BTI, Japan Tobacco, and Imperial Brands. Yeah. And I think they will mention there the illegal e-vape competitors. Certain new, there you go, in the non-combustible product category, may alienate consumers from innovative products through inappropriate, this is key, marketing campaign, messaging and inferior product satisfaction, and without scientific substantiation, based on appropriate R&D product ground standards. Okay, got it. Procurement and raw materials. Okay, let's get a summary of that. Let's get a summary of this procurement. I want to understand where they are procuring the tobacco from. So tobacco leaves from many places. Where? Most of this is done through independent suppliers, okay. The company works directly with farmers in countries like Argentina, Brazil, Italy, Pakistan, and Poland. Good, so it's not China. These direct contracts made about 18% of their total global tobacco leaf needs. And how about the other 72%? Shit, 82%. My brain is fried at this time. Top sources for tobacco leaf include Argentina. There you go. Okay. Malawi, Mozambique, Philippines, Turkey, and the US. That's good. The company believes the global supply of tobacco leaf is enough to meet both current and future needs. Perfect. There's the risk. There's a global border. Products. In addition to tobacco, the company buys many other raw materials from about 500 suppliers. That's a big supply chain. Top 10 suppliers, 60% of the purchases. Okay. You got the paper, of course. The tow, yeah, for the filter. You got the paper. For the packaging. Okay, so that's the paper for the cigarette. And these are used in products like Terea that need controlled heating. Okay, that's the heated tobacco section. So oral nicotine products may include plastic and cans. Okay, they don't talk about the actual countries. Semiconductors, yeah. I don't think the company is going to be heavily exposed to the upcoming tariffs on semiconductors. Call me crazy, but I don't think those e-vapes are going to be. It's worth analyzing. It's worth analyzing. So something to consider. Okay, so yeah, human capital, workforce, 83,000 people. Okay. Government regulation. This is interesting. Let's see if they discuss anything about the illegal e-vapes in the US. I don't think it's going to be a major headwind. I mean, they don't make a lot of revenue in the US. I don't think it's relevant. Environmental regulations, okay, that's bullshit. Potential risk from future, there you go. Stricter new rules for carbon emission. There isn't switching adult smokers to smoke free. Dutch regulation. In the US, maybe with RFK, you might have this scenario, but yeah, I wouldn't consider that as a headwind. Intellectual property. Okay, seasonality. Yeah, is it a seasonal? Are not significantly affected by seasonality. Interesting. However, we typically experience higher SFP adult user growth in the first half of each year. Okay. SEC quarterly. Okay, that's it. Finished. 10K is done. Do you have information on the segments from the products? Risk, properties, market, management discussion, result of operation, 25. And you have like 2 sections. I'm sorry, I'm going to sneeze. Oh, I hate when that happens, man. So I got 2 places in the 10K where you can learn about the company. The first is in the business section that we have seen before. And this is the description section within the management commentary. Yeah, so management has to comment on those earning results in this case, in the past year. And they always include a quick description of the company. I always check both for companies that I want to do analysis. I'm going to take all this information, bam, and I'm going to summarize it. By the way, I'm using here simple words because I don't like bullshit. Right. Let's see. Okay, smoke-free, the narrative. It's about smoke-free products, SFPs, and they include heated tobacco. We already know what it is. E-vapes, yeah, oral nicotine pouches like, hey, I thought IOQS and Zyn. Okay, yeah. So IOQS, they have a heated tobacco device. So, okay, they spent 14 billion. Again, the narrative to end cigarette sales altogether. The company goes to eventually end cigarette sales. I don't think it is. Call me crazy. Call me crazy. You can disagree with me. But my opinion is that that statement is bullshit. Why? Because most of the revenue is coming from, guess, combustible segment. And the revenue, I believe it was increasing year over year. Look at this shit. 21, 22, 23. Revenue is going up. I love it. I love the corporate bullshit. I love it. But I do the same at my work. Like it's crazy the things you can get away with in a multicolor background presentation. It's insane the things you will get away with. It's crazy. So yeah, something to consider there. Key milestones. Let me just have a look. Okay, they bought that. They did it to add Zim. PMI Altria. Okay, to end that partnership. So they got all the control of the IQOS sales. It's pretty much, we already know this information. Okay, we know that. We know that. Marlboro, the top brand, we know that. Revenue and cost revenue. Include product sales per shipping, minus discounts and taxes. Makes sense. Hammer processor pricing, okay. Main cost, tobacco, manufacturing, we saw that. Shipping, yeah. Marketing, yeah. Corporate structure. Let me just go back quickly to see something. Just to make sure that the live is up. Is it up? I hope so. Okay, I would assume it's up. I'm just checking one of the screens to see what's going on. I hope this is not going on a loop. All right. Corporate structure and funding, dividends from subsidiaries. Okay, it gets money from the dividends, makes sense, and the debt repayments because it's a holding. Yeah. Perfect. Nothing new. And these are the consolidated statements. Can we see? Let me just check something. Marlboro. There we go. Just want to see the products if they have maybe a breakdown. They don't. Yeah, but not much. Okay, an e-vape. This is exactly what I was looking for. Okay, let's see what kind of products they sell there. Or what's the revenue coming from e-vapes? Smoke-free. Restructuring. Project to fully outsource the manufacturing of e-vapor devices and consumables. Ew. Okay. And that was in 23. So that was a restructuring charge of 109 million, which means that the manufacturing of these e-vape devices, which is the device that you use to smoke, apparently, it's not the actual product that goes inside. So that's interesting. Looking for the revenue from e-vapes. I will be honest. I'm looking for revenue. Where's the revenue from e-vapes? I don't think they're gonna break it down. Combustible, smoke-free products, smoke-free excluding wellness and healthcare. And wellness and healthcare is nothing. This is what I was looking for, by the way, this chart. I want to know the breakdown within this segment. And you don't have a breakdown by e-vape. I want to know how much they're selling from e-vapes. I don't think we're going to be able to see anything like that. Yeah, these are the battery-powered devices that produce an aerosol by vaporizing tobacco-free liquid. I don't think you can make those liquids flavored in the States, by the way. Using patent technology, flavors and nicotine. I think the whole fuss about the illegal vapes in the States is that they were flavored and that flavoring was addictive. So that's why they couldn't do much. Okay, 14. Nothing. I want to see the figures, baby. Show me the figures. Show me the numbers. Product warranty. I don't think they have issues with that. Warranty. 76 million, maybe? Settlements. Okay, that was... Yeah. Not considerable, nothing. Segment reporting. Yeah. There is nothing here because... You see what I mean? You see? So, where is the e-vape? There isn't. 17. Okay, nothing. E-vape. Ah, there we go. What's that? It's nothing. It's just restructuring charges. Bullshit. Nothing. All right. So, let's move on. I think I already know what the company does. I know where most of the revenue is coming from and where the narrative is going. So let's look at the drivers. You know, the upside that the company has apparently. That was discussed in the last earnings. I think Q4 24. So you have the Z nicotine. You know what the Z nicotine is? Remember those pouches? That's why it's important to look at what the company does first, and then you go into these details. So, Z nicotine, volume growth and capacity investments. Okay, 23 demand acceleration continuing in 24. Outside the US, shipments grew 75%. Okay. US cans, which I think you sell them in cans apparently. So, interesting KPI that you're using. Sorry, that's up 50%. Q4 up 42. Full year volume. Okay. International shipments. The capacity goal is 900 million cans at the Kentucky plant. Good. So this is made in the US. I don't know where the raw materials are imported from. Too many countries. They don't say specifically one. And New Colorado site in early 26. Both in the US. That's good. Okay, so one of the growth drivers, I like it. Do they talk about how much revenue they generated? They don't. So the goal is quite ambitious, I gotta say. Check this out. Let me take a calculator. So we've got 581. Shit. 900 is the target for 25. 581 was the actual value they delivered in 24. So they plan to grow at 55% year over year, which is even higher than the growth rate compared to 23. Wow. Interesting. It's an interesting segment. I gotta say that. Scale and profitability of the smoke-free business. This is what I'm looking for. How profitable it is. So total smoke-free net revenue reached almost 15 billion. Okay. 14 billion PMI net revenue in the fourth quarter, 42%. Oh, 42% adjusted gross profit. That's a lot. Smoke-free business reached 40% of the net revenue. Okay. And around 42% of adjusted gross profit. What? I wish I had access to that chart again. Shit. Smoke free. I don't think it's gonna be smoke free. Maybe with a dash. With a dash, yes. Let's look at that chart again. There we go. Smoke-free. These are net revenues, and I'm looking for earnings. Sorry, net gross. Gross revenue. Sorry. What's this? Shipments. I can see the shipments per country. Holy shit. Where's the US? There isn't. What? Where is the Americas? Yes, we have Argentina and Mexico. And on the next page, we don't have anything. That's weird. Yeah. Anyways, I'm looking for gross profits. Where are the gross profits? Show me the profits. Net revenue, operating income, and where are the segments? This is the segment. Okay, so the smoke-free product SFP, was that the name? Operated by segment, yeah. So what was the smokeless segment? I don't remember the name of the smokeless segment. SFP. No. Americas. All right. Wellness. There you go. Smoke-free products. Show me the gross profit. Where is that gross? Anyways, I'll take the face value from the earnings call. I'm not able to find it. I mean, I will be able to find it, but it's going to take me way too much time. And I don't want to waste too much time with this. I don't want to waste more time. I'll take the face value. So it's about 42%. Okay, 38 million estimated smoke-free users globally. That's not a lot. Smoke-free users globally. That's a small amount. Okay. Next, heats non-burn momentum. So that's the IQOS device. Great, strong momentum, continuous growth in Japan, Europe. Despite the EU, this was the topic, the flavor ban. Yes, there is a ban on flavors. The growth of IQOS is increasingly profitable. I need to know this before I continue. So let's see. Has the US banned flavored e-vapes? April 25. Let's see. Because I think they banned. Has not enacted a blanket federal ban for all flavored. The FDA has implemented stringent regulations that have effectively removed the majority. There you go. Yeah. So the FDA has denied marketing applications for over 1 million flavored products, particularly those with fruit, candy, or dessert. Insufficient evidence that these products help adult smokers quit. Exactly, because these flavors were highly addictive. Only a limited number of tobacco or have received the FDA authorization, which Philip Morris did. So, we have a new Supreme Court ruling. What? Upheld the FDA authority to deny marketing applications. Okay. The FDA actions were consistent with its regulatory standards and they reinforces FDA positions. That's good. Okay, so the regulation is still there. I mean, it's bad. It's bad for the company, but it's good for consumers. Quantitative evidence. So, H2. These are the fucking segments. IMS. Is this the Smoke-free gross profit up 23%. Organic gross margin expansion. Interesting. So the smoke-free product is bringing margins. I didn't think about that. 750 million in gross. Okay. 2 billion gross savings. That's just not really interested. Okay. So they have a target of 2 billion in cost savings for about 3 years. So far they achieved 750 million. That's a lot in cost savings. Full year organic operating income up 15%. That's why operating income was high. Let me just go here. Statements. Operating income. No, they were down 6%. So let's have a look at operating expenses. Let me just remove this. Yeah, they're up. Operating expenses are up. That's not good. So are those cost savings in sales general admin? I believe so. Gross cost. So it was sales general and admin. Where is it again? There. No, apparently it wasn't either. No. In any case, it's not a significant growth driver. So Russia and Ukraine hit not burn volume. Okay. %, of global heat non-burn volume is currently unavailable if... Okay, I want to know more details on this. Full details, and I'll use for all on this one. They want to re-entry in Russia and Ukraine. What? How? Still about 10% of the volumes of the heat that we don't really do. We can't realize the full growth potential. Wow. Geographies of Russia and Ukraine, now for obvious reasons. But if I was just looking at the numbers, I think we have left behind about 0.6 more point of growth, which we would normally expect to deliver if all these markets were subject to the same sort of market conditions. Okay. Okay, yeah. 28 billion units are not operating. Wow. 28 billion units of heated non-burning are not operating at full growth potential. Good. So there's a growth driver there, but I don't know how they're going to go back into Russia. Yeah, the upside depends on resolution of the restrictions in Russia, which will only happen if the conflict comes to an end. And I don't think that's going to happen. Call me crazy on that, but I think all the fuss with Trump, planning to end this conflict, too difficult to stop. It has too much momentum. So I don't think these two countries are going to reach an agreement. In any case, something to consider. Now you know that if the conflict is, it's coming to an end, now you know that Philip Morris is going to rally. So there you go. By the rumor. Headwinds. What do we have? Heated. HD. What the fuck is with these acronyms, man? Heated tobacco units. Go and figure. Prepared remarks, okay. We have not assumed any significant new market openings in our guidance. So that's organic, yeah. In the second part of the year, we should bring Italy and other geographies at par to what the rest of Europe is going through. Quantitative regional split, simplifying, reiterating, no new geographies. This is interesting. So in the Q&A it says that we haven't assumed any significant new market openings in our guidance. Okay, which means that Italy is not gonna, yeah. We should bring Italy and our geographies at par to other European countries. Okay, it was not mentioned in the prepared remarks, so how much confidence they have with this, I don't know. Let's have a look. Out of stocks is challenging to produce retail margins. Expect retail pricing to naturally normalize as supply. Control for Zin. Okay. What's going on with that? For details. Let's see what's going on with Zin. What was that? What was this again? It was the pouches, yeah? So PM. Images. Yeah, these were the pouches. Those tobacco pouches. Okay, so how do you control the retail price? Retailers have been marking up by $1. Okay. $1 to $5, while your wholesale was only 30 cents last year. Is there a way to reduce retail prices as supply normalizes? Very interesting question. Okay, so if you have a degree of out of stock, as is experiencing, it's obviously managing the price at the retail level is a bit more challenging. But I believe with the growing supply of the product, I think this price will come to normalizations. I have to also admit that, look, we are happy with the support we're getting from retailers, okay? And it's not easy for them to be confronted with the product. Shortages can erode consumer trust. So they, okay, got it. When there is a shortage, they put a very high price, which there is a risk that consumers are going to say, okay, fuck this. It's a big risk. It's a big risk to consider, because this is for the general public. And of course, you might have price sensitive consumers. So it's a risk to consider. Okay. So they don't have control over retail pricing. The pricing will come to normalizations while supply constraints. This is a big issue, huh? So they're not able to match the demand for the product. Holy shit. Excessive markups, capture value. Okay. High shelf prices may suppress trial and repeat purchases. Makes sense. Yeah, okay, this is a downside. I don't like it. Timing. What do we have here? So Zin Ultra launch. FDA authorization, which has historically taken 5 years. Okay, we can provide a timeline beyond that. It's not a growth driver. Next, flavor ban. I don't think Poland has put a stick in the ground which moment they really want to fully implement the ban. So I think it will happen more towards the end of the year. Okay. I think they sell to Poland quite a lot, huh? Poland? So, let's see, there. PMI shipments, 25. It's the third in Europe. It's the third market in Europe. Okay, that's the total shipments. And if I look at heated tobacco, I believe that's where the ban on the flavoring of this heated tobacco is. It's the second most important market. Yeah, it's the second most important market. 5.4. So they could lose 5.4 billion units, and the market share for heated tobacco is 10%. It's a good market. Huh? Don't get me wrong. Poland is a good market for heated tobacco. 5, so that's four times less than cigarette sales. 25% is still a big hit. Interesting. Poland it can be a headwind. Now, do I really plan to own this stock until the end of the year? Hell no. Maybe I'm planning to hold it until the whole fucking situation with the drama in the US fades. And that's when I sell this and I go back into semiconductors. Okay, so we have a headwind by the end of the year. And then we have heated tobacco. The heck was that you? No, it's pretty okay. We still left 20% heated volume untapped in Russia. We discussed that, yeah. Okay, got it. I think we got most of the headwinds. I won't go into the one by one detail because you have all the questions. You know what was asked, what was answered. So it's quite interesting to see the script because this is using that multi-reasoning step process. So it's really, really cool to see that. Yeah, this is the retailers marking up the same price. Limited control. Yeah. So essentially the algorithm is analyzing one by one and it's creating these outputs. And in the last part, which is the one that we have seen in this ranking, the AI is looking at the previous replies and it's consolidating all that into a final summary. Okay, so it doesn't look bad. The outlook, I don't see any major headwind. I don't see anything. You know, let's go back to the Q&A. Let me just go back quickly because the Q&A I think is the most important one to look at those headwinds. So we have HTU. We have seen that. Let me see. Italy and Czech Republic have lagged their expectations following the flavor ban. Favor bans are a headwind, and yeah, I think this is the big one that I see. So we got Poland by the end of the year. I'm not planning to hold this stock until then. Hopefully, I hope the fucking situation in the US is resolved in 90 days. Interesting. Okay, next one is key drivers behind your robust margin expansion. Was this the flavor free? I think this was unflavored. Let's ask the Oracle. Is this flavor free? It's a heated tobacco device, okay. Doesn't contain a flavor of its own. So it's a device. It's not the sticks, it's a device. Okay, got it. You see how helpful this ChatGPT is? I love it. How long until the device contributes meaningfully to margins? Oh. Positive mix from higher margin smoke-free products, okay. Benefits. Anticipated FDA authorization mid-year. Can be a good catalyst there. The FDA authorization of this device. Initial support investments will be a drag, but the Illuma should be a net P&L contributor within two. It's 2 to 3 years. So this is burning money. Shit, this product is burning. It's burning cash. It's not profitable. 100 basis points. Adjusted operating margin expansion in 25. That's 1%. And it's adjusted. So go figure what are the adjustments. Which I could, but it would take me too much time. 2-3 years to become net positive. I don't know. Okay, so this is the growth. Okay. So the issue is for the momentum supply rather than providing forward-looking metrics. So essentially he was asking that zinc can accelerate to that growth. Scar data and full supply normalization only in the second half of the year. Okay. Essentially, he didn't reply as to why they're confident that those pouches are going to be able to expand that quickly. I don't know. Sometimes you just demand, like you don't have a reply because people are just buying. That's the marking up. We've seen that. The Zin Ultra, same FDA authorization, 5 years, too long. Italy, Poland, and there you go. So Poland ban, Italy softer Q4 flavor ban. Okay, so that was recent. Okay. And my forex headwind guidance is lower than the spot rate math. Very interesting. So Q4 Italy remains lower. Forex 60% of debt in euro provides a natural hedge. Yeah, because the euro is gaining the dollar. Hedges cover 60% of yen exposure. And the negative from Russian ruble. Ruble? They sell to Russia. Holy shit, they sell to Russia. Wow. How? Huh. Now I'm curious. Does PM Philip sell to Russia? You see, I don't have to do Google searches. This thing does it for me. Despite announcing plans in 22 to exit the market, they haven't completed a withdrawal. And has knowledge it might never sell. Wow. Discontinuing certain cigarette products, okay. I can't believe they still sell in Russia with the bans. PMA has been listed by Ukraine's National Agency Corruption as an international. Wow, that's why they're not selling in Ukraine. Got it. Due to ongoing operations in Russia, PMA has been listed by Ukraine's National Agency of Corruption Prevention. Wow. Sketchy. As an international sponsor of war. Marlboro, yeah. Holy shit. But it admits it might never sells Russian business. Yeah. It's crazy, huh? You see how powerful is AI? Do you see what I mean? It's crazy. I don't have to do these searches. This thing is looking for me. Great. Let's go back to the headwinds. Okay. So they still sell in Russia. Very interesting. Hedging to explain forex guidance. Yeah, so synthetic moist nicotine versus dry pouches. This was not in the top 5 challenges. The market user segments and downplayed synthetic moist pouches. Yeah, it's not important. Let's see. E-vapor category as a headwind. Will vapor growth cannibalize tobacco? Oh, this is a huge question. We believe the total pie can grow under proper regulation. The illicit e-vapor market obscures true demand, exactly. Once regulated, categories should normalize and expand overall market. The ecosystem under clear regulation sees vapor as additive. Yeah. Okay. And this is the thing. The e-vapor, the illegal e-vapor market is obscuring true demand because you have a ton. How much is a ton? I can actually check it on this thing. So market share of illegal too tired. E-vapes in the US 2025 2024, let's see. %35 market share. That's a lot. And there are estimates that they say it's up to 70% of US vape sales. They might be illegal. Wow. It's crazy. So it's a lot. It's a lot. I don't need to know the exact number. It's a lot. Great. It's not great, but it's probably not going to go worse than this. You know what I mean? So I don't think the market share of illegal products is going to expand right now. It wouldn't make sense. So yeah. And that's all right. HTU reacceleration. We already seen that. There was no reason as to why. Russia, Ukraine is an untapped, particularly Ukraine. That's it. So these were the risks. Okay. Concluding. I don't see any major headwind aside from the ban in Poland this year. And yeah, I think the tariffs, I think the company is relatively safe because they don't sell a lot in the US. You don't have even, it's crazy, you don't even have information about US sales. Is there any, let me just see. How much Philip Morris sells in the US alone 2024? Is there any information on the web about this? I don't think so. Altria. Manage the sale. Wait. What? What is the relation between PM and Altria? April 2025 sources. I can't believe Philip Morris is owned by Altria. Have a shared history, but now operate. Oh, man. And I thought that they were the same. Okay, no, I thought like for 10 seconds that they were the same because I know that these two are competitors now. So PMI was spun off from Altria in 2008. Good. And that's why they collaborated in that in this product, IQOS, and that was the heated tobacco product. Okay. Got it. Okay, good. So PMI has re-entered the US market, which includes the Z nicotine products. Smoke-free products, okay. But they don't say exactly in the US. But they mainly sell these pouches. Okay, got it. So 1 hour later, now I know what the fuck the company does. I know what the headwinds are. And I know that the upside, it's not major, I'll be honest. Out of the top 5, this is not going to be possible. I don't think that the agreement is going to be reached. Cost efficiency is good, but I don't know. I prefer the company to grow rather than to grow net earnings by reducing costs. So this is a good momentum. So I can see strong growth in this product. Yeah. And I think the biggest one is this one, the Zine expansion, where they plan to go from 580 to 900 million cans this year. And there is a new Colorado site in early 26. Shit. That's good. So I believe that this product is leading the non-combustible segment. This one. It's the non-combustible segment for sure. Where is that segment? It's not around here. But yeah. Perfect. You know what I mean. Perfect. All right. So let's see. Does it make sense or not? Let's look now at institutional activity. So I'm going to leave this here. Word wisdom, Philip Morris. Oh, holy fuck. Wow. So institutions have increased significantly the number of their positions in the stock. 13%, to be precise, sorry. 14% actually. Quarter over quarter, and this is Q4 data. Q1 is not compiled yet because they have 45 days until the end of the quarter to file the holdings. So we got an increase in new positions, good. Yeah, we have also an increase in already existing positions. Put to call ratio is up, which makes sense because when institutions buy shares, they usually buy puts as a hedge. So this is not particularly concerning. Wow, in the top 10, the number of institutions, we have 78 institutions holding the company in the top 10. That's not bad. That's not bad. That looks good. And if I look by ownership, let's see who owns the company. Vanguard, they increased the number of shares. Capital Words up, BlackRock up. These guys are down. Oh, by 4%. Oh, they sold a lot, and this was back in Q4. Yeah. Okay. So we have a few funds that sold shares, but overall, the ownership by institutional funds is still up. So that's good. That's good. Okay. Institutional activity passes the check. So I like that. Insider buying, it's not accurate. I don't know what's going on with Open Insider. What the hell? Let me see if I do a Google search. Open Insider, Philip Morris. I don't get it. Why do I see this other equity in the page for Philip Morris? It's gotta be a bug or something. I think it's a bug or something. I don't know. I won't go into the details. Oh, shit. Um, so I think I checked most of the stuff that I look for. Valuation. It's just for curiosity. Just for curiosity. Let's see. I'll look at FinChat. So here, if I go to Philip Morris, I'm just looking at sorry. We've got ratios, and I'm looking at price to cash flow, free cash flow actually. There you go. There you go. Okay, how much is the median over the past 10 years? Yeah, the company is trading at a premium to the median. Is this a reason to not buy the stock? Absolutely not. That's why I don't look at valuation. It's the last thing I actually look at. It just gives me an idea that the price is expensive, but not as expensive as back in 2017. What the hell? What happened back then? Let's look at the weekly charts. 2017. Huh. Interesting. So the stock was more expensive in 2017 from a price to cash flow perspective, free cash flow. Yet now the stock price is above 2017, but it's cheaper. It's cheaper on the price to cash flow ratio. Not by a lot, but wow. Okay, that's good. That's good. That's good. All right. Next. I look at EV to sales. Yeah, it's still below 2017. Not bad. Not bad at all, no? Of course, they are above the median. I don't care about that. They're expensive because everybody's buying this defensive stock, so it makes sense. Price to earnings. Price to earnings. Holy fuck. Okay, that's expensive. On a price to earnings basis, it looks expensive, yeah. Do I really care about earnings? I do. Not a lot, but compared to free cash flow, I prefer earnings to be honest. But this looks bad. This looks bad. So let's understand what's going on with earnings. Why are earnings depressed? So we've got revenue quarterly. Let's look at quarterly data. So operating income is down in Q4. Okay. Q1 as well. So that is mainly driven by, let's see, SG&A. And it's SG&A. They have zero research and development. Crazy, huh? Weren't they developing any new devices for this heated tobacco? Yeah, maybe. Moving on, let me just see. Here. Okay. So this is the main reason. The operating income is down. Okay. SG&A is increasing. I don't like that. I need to understand why. So pre-tax is up. That's fine. We have net earnings down. Holy shit, why? By that much? Let's go back again. So after tax. Okay. It's because of the taxes. So pre-tax income was fine, but they had to pay a lot of taxes. or maybe it was after tax other expenses. I don't like these other expenses, man. What the hell is this 2 billion? Something to consider there. So net income is down because of this expense. And taxes are fine, are in line. So pre-tax, nothing suspicious, but where is suspicious is this fucking charge. Okay, let's do the following. Bam, Control P, save. Man, this is a long live. Desktop, I'm gonna do 10K. I can name it whatever. I'm just too tired to do analysis right now. I gotta be honest with you. 10K. Let's see. Explain the gap between pre-tax earnings and net earnings. It seems that net earnings are down significantly. Why? And this thing is going to look for stuff, exciting stuff. So let me just look at the metrics. Holy shit, I have 3 viewers on this. What? Go and figure. Okay. Interesting. Why? That's a lot. That's 10% of my followers. Okay. Legit. Okay, let's go back to this. So, pre-tax earnings, okay. Charge. There you go. I love ChatGPT. If you say that this is bullshit, it might be. You have to double check because this thing can make errors. There is here a disclaimer. You see that? That said, this is gonna save you a lot of time. What's this 2.3 billion charge? A write down of an investment in RBH. What? Okay, so full details on this one. So what I will do, probably I'm gonna do it now, is just Control F on this thing. RBH, where is the 10K? There. Control F, bam. 121 mentionings. Write down due to legal uncertainty. Oh, I think I know what this is. There is a legal case. There is a legal case, man. Yeah. 2 billion related to this Rotmans, Benson, and Hedges equity investment. Okay, so in 2019, okay, RBH entered the CAA due to significant tobacco litigation liability in Canada. Wow. PMA deconsolidated this, okay, and treated its stake as an equity investment. Wow. Interesting. They deconsolidated and they considered it as an equity investment. Okay. October 24, proposed plan for. Okay, that was filed. Global settlement of 22 billion. Holy fuck. RBH, Imperial Tobacco, and JTI. The allocation is among the 3 companies remains unresolved. Wow, that's like 6 billion. Over 6 billion per company. Ouch. That's bad. That's why. Got it. That's why PE is like this. It's because they allocated. Yeah. they've allocated this 2 billion. Man, I'm just worried whether they're gonna allocate more in the next quarters, because 2 billion is not the same as 6 billion, which is what, 6, 7 more or less, which is how much it would be fair to split this among the three companies. 7 billion. Ah, shit. So there is still more downside ahead. Ah, this kills me, man. This is not good. This is not good because it's a lot that the stock can still lose in the future. RBH argued the plan was flawed to resolve the allocation issue. Okay, they objected, of course, to the litigation. Which a potential PMA performed the quantitative evaluation. Okay, the fair value 740 million. Down from a private carrying value that was 2.36 billion higher. Ah, right. So they wrote down the value of this. Wow. Okay, let me understand. So RPH was valued about 3 billion. Yeah. It went down by 2.3, and now it's worth 714. Correct. Okay. Settlement to RPH, tax, cash impact, EPS. So does BMI have to pay the settlement? Is not. Ah, that's good. Okay. Its affiliate could be on the hook for the 7 billion. Exactly. So that's a collective 22 billion in USD. Okay. They deconsolidated. That makes sense. BMI doesn't own. Oh, good. That's good. BMI investment suffers, which has already led to a 2.3 write down. So they can still write off 700 million, but that's it. In the worst case scenario, imagine the company goes bankrupt, they write off everything, and that's it. Fair. But it's not like they have to write down another 5 billion to reach the 7 billion. Okay, that's good. That's really good then. PMA was just to inject capital. Oh, that would be bad. Hopefully they don't do that. It's subject to a settlement as the case contribution. Okay. Its stake is affected, so in the worst case scenario, they're gonna get rid of the 700 something million, and that's it. So the downside is not very big. You see that's how you do analysis nowadays. You know, you use ChatGPT, you use a lot of stuff that's available on your hands. There you go. So that's the reason why this shit is up. It's because of the litigation. It's because of the litigation in Canada, which led PMI to write down the value of their investment in that group, RGB or RH. What was Rotham, RBH. So because they wrote down the value, of course, this shit is expensive now. I'm quite keen to buy, to be honest. It's a non-cash expense, so who cares about that? Press to operating cash flow. I don't know. It makes sense. I mean, it's a defensive stock. Moving on to margins. They have good margins, man. Look at this shit. Gross margins Oh, and they're down from 21. It might be because of the prices for the tobacco leaves. Operating margins down. I don't like that. EBITDA down as well, of course. Net income. There you go. It's down, of course, because of that write down. So if we look at free cash flow, it's up. That's good. So about 1/4, a little bit like between 1/4 and 1/3 of the revenue ends up as free cash flow. That's good. Legit business. Even though they have non-cash write-downs, which I don't like. Free cash flow to net income. There you go. And that means they have a lot of write-downs. Yeah. So am I happy with the write-down? I am, because it's not going to happen again. At least not at that level. But it's not positive. I gotta say it's not something I think it's positive. And yeah, you can see here some of the metrics. Yeah, I'm not gonna go into the details too much. Nicotine volume. Yeah, this was one of the growth drivers. Yeah, this was the nicotine pouches. And that was the zine. This was the target for 900, I think it was 925. So quite decent. Cool. All right. So I spent way too much time with Philip Morris, to be honest. What's the conclusion? That's all it matters. What do you do with this? I'm gonna have to think about this again. I'm gonna have to sleep and let the information condense, and make sense hopefully overnight. But I'm not really keen on this freaking overbuying activity. Yeah, it's a defensive stock though. That's good. What would be the drawdown? So if suddenly uncertainties are cleared, which I don't think is going to be the case, it's a 10% down. 10%. 10% makes sense. I mean, for my risk, it's nothing. For my risk tolerance. And the upside can be limited as well. I don't think it's going to rally too much. Well, something to consider. This is what I'm going to do. I go to Philip Morris. I'm going to add it. Let's see if I remember how to. In the buy list. And I'm going to check tomorrow. Or I don't know when it's going to be the next live. And I'm going to provide an update on whether I bought or not Philip Morris. So far, it looks okay from a momentum perspective. Narrative-wise, it's fine. I don't like the non-cash charges related to that equity investment in RHB, and I don't like the insider buying activity. But yeah, what I like about the stock is it's defensive. It makes sense right now. Let's see volume. Just the last thing, the very last thing of the live is gonna be to look at volume. So Philip Morris, over the last 5 days, volume is up 8%, not a lot. 10 days is up 30, makes sense. 1 month is up 8.9, okay. So people are jumping on the stock, not as much on UVV. What the hell? I'm not gonna do analysis on UVV now. Universal Corporation. Nah, I'm not compelled about this. Look at the decline. Nah. I don't think it's a defensive stock. It looks bad like that. So I think the volume there is because people are getting rid of the shares. Let me just see again. UVV. Might be a short. Nah, it's not major. If I was to see a significant increase here in volume, looking at this pattern, I would probably short the company, but no. Okay, that's it for today. Long video. Hopefully you have now a better idea of how I analyze stocks. It usually takes a lot of time, a lot of checking, a lot of ChatGPT, a lot of analyzing earning calls, the business, what the company does, news. So yeah, I think that's it. Thanks for watching, and I hope to see you in the next one.